morning and welcome to Business Morning on Channels Television. I'm Chimize Obi Iwago. Well, we'll begin with stories in the world of business. And the transmission company of Nigeria says it has cancelled many non-performing electricity transmission contracts. 4 of such contracts were cancelled in the last 2 months, which resulted to some persons staging a protest against the TCN management on Tuesday in Abuja. The managing director, TCN Usman Mohammed, maintains that the recent closure of the company's premises by the Federal Inland Revenue Service was unnecessary. According to him, the prices of most of the non-performing contracts were highly inflated, as some of the projects were eventually completed at rates that were about 10 times less than the initial contract sum. And the push for a better import duty regime for Nigerian ship owners through a special intervention is in progress, as the facility will allow them to be competitive with their foreign counterparts. This is coming from the Director General of the Nigerian Maritime Administration and Safety Agency, NIMASA, who spoke to journalists at an event in Lagos.
And they've complained that the tax regime or the import duty regime for Nigerians who are bringing vessels to the country or spare part of vessels to the country are not favorable. Based on that, we opened engagement with the central bank on the possibility of Nigerian ship owners accessing a special fund for that purpose at 1-digit interest rate. And they said 2 things. 1, it is possible. 2, it needs further engagement with higher levels of government. Apart from that, we're pushing for a special facility for ship owners to access at a single-digit interest rate to acquire vessels. We're pushing for a different tax regime. Many foreigners, when they are bringing vessels into the country, they are not taxed as if that vessel is a new vessel. It is taxed as if the vessel will come into the country, work for some time and leave. So they have a lower tax regime. But when Nigerians are bringing vessels, they have a higher tax regime. We are saying that this is not going to make us competitive in the industry.
And MTN Nigeria has signed a 200 billion naira loan deal with 12 banks in the country. The loan, which is denominated in naira, comes with a 2-year moratorium and a 5-year repayment plan. The medium-term loan is expected to help the telecommunications giant facilitate the expansion of its operations, particularly into rural areas in the country. Meantime, the Nigerian Telecommunications Commission has given MTN Nigeria May the 29th next year as the deadline to list on the Nigerian Stock Exchange as part of the agreed 330 billion naira fine settlement. And to some market news now, beginning with the currency market. Officials of the Central Bank of Nigeria have met with the manufacturers in the country as it seeks to drum up acceptance for its $2.4 billion currency swap policy with the People's Bank of China. The Central Bank's acting director in charge of corporate affairs, Mr. Isaac Okorafo, explains that the deal will provide local currency liquidity for both Nigerian and Chinese businessmen without being exposed to the difficulties of seeking other scarce foreign currencies.
3 months after the central bank signed a $2.4 billion currency swap deal with China, it has been meeting with owners of businesses to sensitize them on the advantages of the new policy. The latest of such meetings held in Abuja, the nation's federal capital territory, where the benefits of the swap deal is outlined to manufacturers.
The essence is to enable the Central Bank of Nigeria and the People's Bank of China to exchange currencies. The Chinese people will give us renminbi and will give them naira. The amount of renminbi that Chinese will give to us is 15 billion renminbi.
Since we started, we have had 2 interventions so far, and perhaps the 3rd one is already on the way again. And the result has been good. There's improvement in the demand, meaning that most of our people have started to actually get invoices in yuan, and are coming for it.
The president of the Abuja Chamber of Commerce and Industry shares the same line of thought with the federal government on the benefits of the policy. He hopes for better policies to improve the businesses of manufacturers.
The very effort of the Central Bank of Nigeria.
And the Debt Management Office raised 100 billion naira on FGN bonds, which it issued on Wednesday. According to the agency, although it offered 90 billion naira bonds, investors oversubscribed the offer by more than 10 billion naira. The money raised at the offer is expected to go into financing the 2018 budget. The debt office said the total subscriptions received from bidders at the auction were above 100 billion naira. Allotments were made to successful bidders at 14.39% for the 5-year, 14.6% for the 7-year, and 14.69% for the 10-year bond, which are consistent with the rates in the secondary market for the bonds offered at the auction. Meanwhile, at the Treasury bills market, the Central Bank of Nigeria also held its Treasury bills primary market auction. Our T-bills worth 33.38 billion naira was offered, while a total of 49.47 billion naira was subscribed for the 91 days, 182 days, and 364 days, which represents 148.18% subscription rate. However, the CBN allotted a total of 33.38 billion naira for 91 days, 182 days, and 364 days, which represent the same amount of Treasury bills maturing. And for the midweek market review, Temple Ashaju has the details from the stock exchange, and of course, Bosna Mofaye is also there at the exchange. Hello, Temple. Good morning.
Good morning, Chimeze. It's good to be live here on the floor of the NSE again.
Right, we've seen bearish sentiment persist in the equities market. However, we saw some reversal in the fixed income markets yesterday. Tell us more about yesterday's proceedings and how the bond and Treasury bills auction results will drive sentiment today.
So somebody would like to say hello to you live from here. Bosun Omofaye is here today. We're here
good morning, Bosun. Good morning. Good to see you.
Stock Exchange. Chimeze, good morning.
Good morning to
and
you.
Of course, yes, a very big story from the Central Bank of Nigeria this morning just released its 2016 and 2017 financial statements. We got some data here, but we'll talk about that a little bit later. But this is a full year report of the bank of all banks in Nigeria, as we want to put it. So that's one top story. But just the teaser here was that the net income between 2016 and 2017 for the central bank actually declined significantly because of what the central bank calls the loss on fair value on financial instruments that were offset, was sold off. So the net operating income actually went down by 38%. That's quite a big story. We're giving that to everyone in the news later in the day.
And absolutely all sides of the market will be reacting to that much later today.
Well, there's a bit of a look back data from the central bank. But of course, it's good to see, well, if central bank audits and go approve other banks' financials, it's so good to see what the central bank books of accounts look like. We'll get some details on that.
So let's now bring you up to speed with the midweek trading as we had yesterday. Yes, the market has opened this morning on the floor of the NSE, and let's commence with equities where trading was still bearish yesterday by 0.6%. The all-share index came in lower at 35,074.82 with an equity capitalization of just 12.8 trillion naira. We've seen sell pressure across boards, across major value stocks such as Zenith Bank, which impacted the banking sector. We had sell-off on UBA, Union Bank, as well as Guarantee Trust Bank as well. That lowered the banking sector of the Nigerian Stock Exchange by 1.03%. But the most we had was in the consumer goods sector, where Dangote Flour impacted that sector heavily. And the only positive we had yesterday was that linkage assurance, where the sector, insurance sector, came closing at 0.04%. but we do expect the markets to also begin to react to the anticipation of the Q2 GDP, which will be released on the 27th of August. That's in the next 2 weeks. However, one of the key trends that we are seeing right now in the market is the consideration for the issuance of commercial papers. We've seen the reopening of the Series 14 of 100 billion naira program by Access Bank, and we've also seen the reopening of the Dangote Cement issues of Series 3 and 4 CP under 150 billion naira CP program. Those are some of the trends that we're beginning to see playing out in the Nigerian markets, the equity side of things, as investors continue to look for alternative finance and means. But then let's go for the Nigeria energy market, where we have a bit of transaction and good activities yesterday. Just two major stocks under the oil and gas energy markets now had good movements, talking about Forte Oil and Total. But if we look at corn oil was unchanged at 22,719 volume, in terms of volume, 22,719 units of shares exchanged. But that did not change anything in terms of percentage. You look at Forte Oil, as I said earlier, that was positive by just 0.65%. Closing at 23 naira 15 kobo after investors exchanged at 700,949 units of shares there. 11 PLC was unchanged as well. 60,721 units were exchanged on that. MRS remain unchanged, while we have sell-off in O&O, ditto for Japol and Eternal PLC. The market is really yet to react to the MOU between Seplat and NNPC. As we have right now, the stock is still trading at 650 naira per share. It's unchanged after just 2,592 units of shares were traded yesterday on the markets. You have Capital Oil, RAC Unity, and others remaining unchanged as well. Now let's take a look at the unlisted securities markets, where the NASD OTC has changed or modified its closing price system. It changed it to, that was changed to a weighted average system rather than the last minute deal method that you used to have. This is similar to what the Nigerian Stock Exchange did a few months ago, where the last minute deal will have little or no impact on the trades for the day. But for yesterday, the index ended at 695.81 after it went down marginally by 0.45%. The market's capitalization settled at 470.88 billion naira after 304,500 units of shares or securities now were traded on the market for a total value of 31.14 million naira. Now let's look at the fixed income market, where we've got two major sides of the market impacting on investments. Yesterday we have the primary markets and the secondary market. As you said earlier, Chimeze, we got the primary market auction of 33.38 billion naira allotted across the maturities in 91-day, 182-day, and 364 days tenors. Now stop rates came in at 10% for the 91-day, and for the 182-day we got a stop rate of 10.4%. The 364-day had 11.2% movement. But for the secondary side of things, we've got the bullish trading day yesterday. Yields moderated at 4 basis points, while demand across the short and long ends of the curve also was experienced. We saw that yields on the 29-day to maturity tenors was down 83 basis points. It contracted to by 83 basis points. There was also contraction across the 232-day to maturity tenors by 26 basis points. However, we had sell-offs on the 162-day to maturity securities by 22 basis points. Finally, the bonds market had its own bearish sentiment, persisted as investors, gave considerations to the primary market auction, which was oversubscribed by 10 billion naira, as against the 90 billion naira that the DMO had issued. The bearish sentiment, with the bearish sentiment which persisted, we saw yields up by 5 basis points to 14.35%. We also saw yields expansion at the mid-end of the curve, while as investors sold off on the February 2020 and March 2036 papers. As you have right now on the screen, the 18th of March 2036 papers came lower at 86 naira 61 kobo after just 1.5 billion naira was exchanged on that, and the demand rose at the short end of the curve on account of demands in June 2019. Chimazi.
All right, thank you very much for those updates, Temple. We'll take a quick break now. When we return, it will be time for our commodities market update. Do stay with us.